going on, Tommy?
How you doing, brother?
Doing all right, my brother. I'm doing all right. You in any trade so far?
No, I'm not in any trades right now. I took a little break this week. Last week, GU took like 115 bucks from me, so it's all right. It was my fault.
That's
Y'all traded.
understood. That's understood. I've this morning I've been watching that the pound USD, Euro USD, and USD CAD, as well as the USD CHF. The alerts I put out Monday. I've been monitoring them. I grabbed about 20 pips on Monday. I didn't do anything with it yesterday. I got stopped out on USD CHF, but today those trades are now coming into play. As far as USD CHF goes, it did dip down real quick. I'm gonna just go ahead and start off how and show you how I actually develop my weekly analysis each week, just from the start to finish. Pretty much, the very first thing I do is look at last week's high and low. So for let me go actually do this USD Euro USD. No, I'm gonna stay on the USD CHF. All right, so basically looking at the the USD CHF and last week's price points, right there with these 3 points is what I did. I indicated the high of last week, the low of last week, and I'll change this color right here to green or yellow, being the open of last week. I found that, once I identified that, I go straight to the 4 hour chart. And on the 4 hour chart, what I'm looking for is exhaustion in the trend or supporting resistance areas within the high and low of last week. So by what I've seen now is this swing, clear as day from the low of last week to the high of last week. That's a real obvious swing, just what I can notice off indicating the high and low of last week. You can see that swing in there clear. Now with that, of course, anytime I identify a swing, I'm pulling out my Fibonacci. So with that, yesterday, what I did was I bought here at TP1. Remember, if price action doesn't confirm that that's a pretty stopping point, then you'll likely proceed to the next one. So this is where we're at today. Notice I still can see last week's low, last week's open with the yellow line, and last week's high. I can still see all three of those points. Now, based on my Fibonacci and my TPs, each TP, of course, is a potential support or resistance area. So with this TP1 being breached, of course, it became resistance. With this TP2 being where price action is now stopping, it's showing support. This is the 15-minute chart. As I zoom in, you can also see divergence in there real good. And of course, divergence is simply price moving one way while momentum is moving another. So right here with this divergence, we can see it was over the past 3 days. Price action still pushing down while the momentum is higher with each low peak. You see that?
Yes.
That right there is a sign of exhaustion and a reversal sign. If we throw a trend line in here, you can actually see that trend channel now.
So you're looking for divergence when you're looking for exhaustion?
Yes, anytime you're looking for a reversal, you want to make sure you see strong divergence. If you don't see divergence, it's likely going to be a continuation.
Okay. And so this, just to be clear, this is bullish divergence?
Yes, this is bullish divergence.
Okay.
So what we can see based on everything, or the Fibonacci, the high and low of last week, is we can see that price has made a swing high, the bears took over. They came down and reached their TP2. And now here is where the bulls will come back in. Now that we've identified this being a target or supportive area for the for the bulls to come back into the market, I'm gonna move my Fibonacci now, and now I'm gonna put it on this swing high to the new swing low. Now I have my bullish roadmap, so to speak, and I also still have the high and low of last week as well as the open. The high of last week is TP1. The low of last week is right here, which is the previous resistance level. So we know when price is broken, how it became resistance right here. We know this level is now resistance, but it has to be retested to confirm that resistance with this movement here, and then you can see the W. So what we're entering now on this USD CHF is actually the second leg for the W. And we should end up here at TP1, which will form this level of resistance. Before moving on to the next TP. Of course, at each TP, we reevaluate price action. But based on the long-term structure, we should at least read. Now, last week, I did enter a signal for price to take up to 966. As you see, we hit that 966 and dropped, and been dropping ever since. If you've ever heard me mention that a lot of times in the cycle, you'll see a set of steps. Here's a set of steps right here. You see that?
Yes.
Level 1, 2, 3. Reset here. So that is exactly what I see on USD CHF. And notice how price will still come back and fall within last week's low, last week's open, and last week's close. Remember, those are key points where volume is. That's why each week I analyze where the high, low, and open of the previous week was, and I trade my current week based on that data.
Okay.
Because the reason I highlight last week's high, low, and the open is because those are critical levels and where volume is trapped. And where volume is trapped is where the market wants to go. Because the market first, and before it moves any further in any direction, it's got to go grab what was left, so to speak. Before it advances, it picks up its crumbs before price advances. Have you been looking at any pair in particular, really practicing on that you want to look at?
I've been practicing on AUD USD.
AUD USD. Okay, good deal. That's a good one to really practice on too, because it moves real consistent. Here on Aussie USD, looking at the weekly, we'll do the weekly breakdown again. Here's the high of last week. And also, whenever I always mention that each candle will likely retest the high and low of the previous candle before advancing. Look here at this Aussie USD, look at the weekly. The high of last week has already been clipped. The open and the low are down here. So just at a glance, what that's telling me is Aussie has to fall before it rises. That's just at a big glance, just looking at the chart based on the weekly. Aussie must fall before it rises because the volume on the weekly is way down there at 0.664. So the weekly high has already been clipped. The weekly low and the open has not. So knowing that information right off the back, I can tell that this week has to decline. So now I can come in here to the daily, and this is what that decline will look like. I know that with that decline, the low of the week is here. On the daily, we can see that we're already overbought. So this daily should very much well be pushing down.
Do you see that we're overbought on the RSI?
Yeah, we're overbought right here. So
I
that's
can only see the top of your screen.
oh shit, hold on. How about now?
I guess I still only see the top of it.
How about now?
Yep, I can see everything now.
Okay, good. What was I doing? I was on Aussie USD. Okay, so now looking at the daily, because it is overbought on the RSI, we can very much predict that it will be going bullish from here. Not only because the RSI is overbought, but because we're also already at the high of last week. So the volume to the upside has already been captured. Now the volume is down below. So as we come into the 4 hour, we can see how price action was completely flattened off last week's high. Right here. Actually, last week's high, to be exact, is the tip of this wick. And that's seen on the 4 hour chart, because on the 4 hour chart, the period separators separate the whole week. So when you look at it on the 4 hour chart, you know the peaks on the 4 hour charts are going to be the high or low of the week. And with this 4 hour coming straight off of this high of the week, look at the RSI and how it's also showing divergence.
Yeah, bearish divergence, right?
Bearish, that's correct.
Price action is going up, but the RSI is declining.
Exactly. That's a significant point that's showing this also being the high of the week. Divergence on this 4 hour, and it's really clear here on the hour as well. So now we can definitely go ahead and confirm that price is being rejected from last week's high. So with that being said, now that I'm on the hour and our entry time frames, I can pull out my Fibonacci. Now, the first thing I'm going to do is I'm going to verify the most recent swing that has been confirmed, which is here, which means the bulls must have reached a resistance or a target. As we see, they have reached a resistance level. Right here. Now, if we want to line it up with correct price action, we would look to our left, and we can see that this green candle, this bullish candle right here, is the candle that set the resistance or the order block. And what I mean by that is, in a trend, when you see an aggressive rally like that, like this right here, when you see an aggressive rally and then you see one candle in there that's going the opposite way before price continues, that's typically going to be your order block and your retrace point. So when that peak's formed and price begins to retrace, you can look to the left and look for that one candle that stands out, and that's typically going to be your order block.
Okay.
So as you see, price simply retraced to the order block, and now it's time to sell again. So the proper sell, of course, based on the 15-minute entry rule, will be at the next hour, which will be 3 a.m., 6 a.m. your time. And then, of course, we would continue down. Now, considering that this is the resistance for the bulls, all we would do, now that we verified it with our Fibonacci and our swings, just simply remove it, and now we have our new one with our current daily TPs, TP1, TP2. And this is how I'm able to ride the market up and down, left and right, no matter which way it goes. Because I'm always measuring I'm always using my Fibonacci. And of course, you know, the Fibonacci doesn't lie because it's really the sum of all numbers preceding numbers. So it's highly, highly accurate. Also, always keep in mind the most important thing is that each candle retests the high and low of the previous one before advancing. That's pretty much saying, if you think of it like this: each candle is a trading period, and each new period revisits data from the last trading period before it creates a new one, a new trading zone for the new period. That's why you'll see a lot of times. Let me find the candle that I can show it on. Like right in here, as you see, each candle retested the high or the low of the previous one before it moved. For example, this one, this green one, right, this first red one, retested the high and low of both of these. I'm sorry, retested the high and low of the previous one. This candle here bounced before it touched the low of this red one, broke through the high of it. This candle here was rejected from the high of its previous candle. This candle here was also rejected from its high and its low. See how each candle uses the previous data and trading zone before it moves to the next?
Yes.
Now with this hour candle that we're currently on, you see it has no wick to the top side. That is likely due because this is the high of the day. So we'll see a trap being set here on the 30-minute right here. Notice how each one of these candles did not close over the order block from the left. It literally hit a brick wall, all of them. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles hit a brick wall at the top of yesterday's order block. You see that?
Yep.
That's a key sign that price can't exceed. Because for the simple fact now, price reached up there, but it did not close up there. So what I mean by that, to be exact, is that price, as you see, went above yesterday's order block, but there's not one close up there. Bless you. There's not one candle close up there. That means price attempted, but price was not accepted.
That makes sense.
And that is the high of the day. That is the high of the day trap. So from here, we should see price begin to drift to the other side of the range. Now, with the Fibonacci swings, whenever you have a pattern playing out like this, this second leg here is typically the same size as the first one. So as this one is from 704 to 689, this one will likely be from 69 down to 685 because they're symmetrical. And it'll look just like this. Which of course takes us right down there to our TP2 for Aussie USD. USD CHF is going to be a real good trade today.
So from the looks of it, it's in the buy zone now, USD CHF.
Yes. Yep, it'll likely be taking off on this next hour as well. It'll likely be coming up out of that. Now on a 15-minute chart, this is what the entry will look like. I would enter, if you're not in yet, at this next hour candle, which is in 2 minutes actually.
And I will do that.
And then as far as your stop will go, since we've already exceeded yesterday's low, we can't put the stop below yesterday's low. So what we would do is look at the 4-hour structure. And our stop will go 10 to 15 pips below the 4-hour structure. The 4-hour structure is the low of the day, low of the week. So we would put our stop roughly around 9435. I'm also looking at a binary options trade that I'm going to take here on the USD CHF as well.
How does that binary options trading work?
Binary options is pretty much timed. It's pretty much the same as Forex, but it's just based on time. For example, what I mean by that is for example, I'm going to do an hour trade. I did an hour trade on USD CHF. That means in exactly 60 minutes, I just have to be 1 pip above 9465.
Wow. And then they pay you out.
Yeah, they pay you out. Most of the binary options payout is 90%, but it varies anywhere from 65 to 90% per trade. So, for example, if I did 100 on this trade, so the payout on this in 60 minutes is 187 because this is an 87% trade. So the payout will be 187. That'll be the 100 I put in and the $87 profit.
Okay, so it sounds like it's less risky than Forex trading.
Somewhat it is, but you have to be a little more precise because 1 pip can make or break your trade. So I do hour or 4-hour trades. That way, I have enough room because on a 4-hour or 1-hour trade, that gives me a potential 15, 20 plus pips to be in profit. If if I was to do a 1 minute or a 5 minute binary options trade, the pips are less and it's a tighter window.
That makes sense.
So I take trades based on the full hour candles. Basically, with binary, I'm just predicting an hour or a 4 hour full candle. So for this particular USD CHF trade, I'm predicting that this current hour will be bullish. And I do that so I really don't have to be exact on the price. I just know I'm trading a bullish hour or a bearish hour.
What are the brokers for that?
I'll send you one right now.
That I appreciate it. We'll take a look at that.
I'm sending it to you right now. Yeah, and they also offer a binary, a demo for the binary, so you can practice that too before you decide to go live on it.
Got it. Thank you.
No doubt. And the minimum there is like $5, I believe. And the smallest trade you can do is $1, so you can literally do $1 trade on out the door. Now, what I do on the binary is I either do a flat rate trades, or I do compounds. And what I mean by that is I'm either just trading $10 or $100, $50, whatever, a flat trade. So say for instance you deposited $50, I would do straight $5 trades. That will be $5 trades. That'll give you a max of 10 on that deposit, 10 trades on that deposit, of course, and it'll profit $4, $3 to $4 per trade. So for that, I would say do 5 to 10 a day for a week. As long as they're accurate and profitable, that's another $350 a week.
Okay.
And that's
Does
just
these
on
allow binary options on Bitcoin?
Yeah, there's a couple cryptos that you can do binary options on, but not a lot. There's like you can do Bitcoin versus XRP. They're really crypto versus crypto with the binary options on the crypto. So I don't necessarily trade the crypto on binary options. I just stick with the currencies.
Okay.
Because they're all the same charts. The Forex charts are the same charts as binary options. So I use the Forex charts to read the binary options. But with the crypto, it's a little different because you got to read crypto to crypto rather than using the dollar at all.
Right.
And the crypto to crypto charts are really rare. You won't find a lot of charts with oh, did you grab that USD CHF long?
I grabbed it.
Okay, good deal. I just noticed it was 6. Now you'll notice that I'm extremely precise when it comes to time. That's why I always stress people use the 15-minute complete close or the hour complete close before they enter, because your entries will be so crisp if you wait for the 15-minute and the hour to close, just like the entry you just took. It's likely you're probably already in profit or coming right out the spread already.
Yeah, that's one thing I was struggling with, my entries and exits for sure.
Entries and exits. As far as entries, make sure your entries are precise on the 15-minute candle. As far as exits, the same thing, except when you exit, a lot of times all you need to do is confirm that you're at a support or resistance level. For example, on this long, at this blue zone right here, this first blue zone right here at 9.5, That is a potential take profit area due to the fact that there's structure here. There's structure here. And if you look at it, this is also one of those order blocks that I mentioned.
Right, I see it.
So that's a potential take profit level. If we keep going to the upside, if you look at the next blue zone, that is also a potential take profit level. And it's labeled by the Fibonacci. And if you look to the left, there's an order block right in here. Right there, that little candle right there.
I see it, the little buy before that big sell-off.
Yep. So with these two targets right here being so close, it's almost sure money. That's pretty much for show money. Not to mention we have the confluence with the cycle here, the 3-step cycle down right here. And those are the steps I mentioned. The steps are levels, 1, 2, and 3. A reset to a complete 3-level cycle is a reset to level 1, which is right here. So all those things add up, confirming each other. That's what a lot of traders, they call confluences. There's a lot of confluences with this particular analysis. Let's take a look at Aussie and see what happened over there. All right, see the Aussie, it's beginning to fall off. Right from that order block. And notice how it's a sniper entry on our Fibonacci.
Yes.
I just made some coffee. Let's take a look at USDCH, not USDCH, CAD. Here's the CAD. Now the CAD trade I called out yesterday, it went to profit. This is why I always urge people to take profit each day. For example, yesterday on this USD CAD, same trade, new day, new entry, same route. For yesterday on go ahead.
I see that it literally took out take profit 2 and then fell.
Exactly, and see, a lot of people won't catch that because we put the TP was 352, I believe, yesterday on yesterday's alert. But based on what the market gave us, not what I wanted the market to, or what I saw in the market, what the market gave us was these 80 pips right here. It didn't give us the last 20 that was on the alert. So what I did, of course, as always, what I urge people to do is take profit or take partials. So that's what I did here. Then, of course, throughout the rest of the day yesterday, it retraced. Today, given the exact same entry. Now, with today's entry, of course, we'll likely proceed past yesterday's high. Because remember, each candle retests the high and low of the previous candle. The low of yesterday has already been tested. So now there's only one way to go, to the high, which is right here at TP2. In my opinion, today we should exceed TP2 and reach TP3 on USD CAD. So rather than eating this trade, then getting the profit sucked up, and then that trade coming back to life, we're able to get 2 trades in the one setup. This is actually, in fact, creating the W. All good there?
All good.
Good deal. Now we'll knock out, let's go to pound. Now here with the pound. Same thing. Same exact thing. I called this sell on Monday. As you can see, price really hasn't went anywhere. It went up to clip some more and trap some more buyers. But based on this increase of, well, let me zoom out. If we zoom out here on the hour, it's clear as day to see that that the pound has been rising since May 15th. A typical cycle lasts 5 to 7 days or 3 levels. We see more than 5 to 7 days, so that reference is out of the picture. We can pretty much at that, well, I ain't gonna say out of the picture. What we can see based on this is we can see that we've exceeded the 5 to 7 days. So that's check 1 for a complete cycle. Now, level 3 or 3 levels that also can now be seen, which confirms the 5 to 7 days and the 3 levels. With 5 to 7 days, it would have just put us here. So at 5 to 7 days, we can check that variable off. We need 2 variables to complete a cycle. We need the 5 to 7 days and the 3 levels. So with this, we have the, I know my handwriting is sloppy, but we have the 5 to 7 days. Check. Now we count the levels. Now we have the 3 levels. 1, 2, 3. We already had the 5 to 7 days way back here. Does that make sense?
Makes perfect sense.
Okay, there's always going to be, there's 2 critical requirements for a complete cycle. 5 to 7 days and the 3 level steps. We got the 5 to 7 days early, but we didn't get the 3 level steps for almost a whole month, really. Yeah, almost a whole month. But now that we have both, the cycle's complete. And of course, a reset would bring us down in here at level 2.
Do you have any book recommendations to learn more about market cycles?
Yes, Master Swing Trader. As a matter of fact, I had 2 books that are really probably take you right up through there. Profiting with Forex. Let me go grab it. I'll actually get you the writers and everything. Authors. I believe the Master Swing Trader was Chris Farley. I'm going to tell you the exact. Alan. The Master Swing Trader is by Alan Farley. Alan Farley. I'm going to send you a picture of him too on the Facebook.
Oh, I appreciate it.
These are the only 2 books I've read based on Forex. And these came within the last, I've read these within the last year. So these weren't even in the beginning, but I wish I had read them in the beginning. Profiting with Forex is by John Jaggerson. I just shot both of them over.
Yep, got it. I appreciate it.
Good deal. Let's go back. So we have shoot. Didn't mean to do that. Screen back up.
Yes.
Okay. So we did the USD CAD, did USD CHF, did Aussie. Let's do Euro. With the Euro, pretty much the same exact thing. Because all of my trades, whenever I check them out on Sunday, Monday, I do my weekly analysis. And whenever I call a trade on Monday, it's typically read and figured in for the whole week. So it's almost like the alerts I send out on Monday can be traded off for the entire week based on intraday position. So as you see, Monday or last Friday, we were here. This was the high of last week. Fast forward to today, as you see, all we did was clip the high of last week, creating an M. And this is the euro. So you see that M there, and if we look back at where the peak started or where the cycle started, it's right here. Cycle started right in here. Now, look how long level 1 drug out. Almost the whole week and a half. That indicates consolidation. Now, if you look at each level is typically going to be the same length. Okay, so when you see a full cycle, you can typically take that whole cycle and divide it in threes. Now, if you look at this second and third level, it's all combined. It's hidden all together. You don't see that step there. You see what? Did that make sense?
Kind of.
Level. Sometimes you'll see the level 1. Sometimes the levels can be hidden within each other. Put it like that. So right now on this particular cycle, level 2 and 3 are combined in a rally. There's no consolidation between level 2 and level 3.
Okay, and how can you tell the difference between where the level 2 and level 3 are?
The only thing is the distance. For example, like right here on this first level, that is roughly, then this next level would fall in right here, and the next level would fall in here. So
okay, I see.
You see now how it's hidden in there?
Yes.
And that will throw traders off a lot of times because they'll be like, well, I only see 2 levels. Where's the third one? It's hidden in the second one. That second to third is a straight rally. Now you see them?
Yeah.
The second and third is hidden in that rally. But it can be seen based on the 2 requirements for a full cycle, which is 5 to 7 days and 3 levels. Keeping in mind that the 3 levels are typically the same exact distance. That's why I know you've heard me say always count the pips.
Yes.
That's why I count the pips. Anything I do is a calculated assumption or prediction. It's never by random. Everything is predicted based on numbers.
So when you say distance, you mean the pip count?
Exactly. For example, this pip count, total pip count from high to low of this cycle is 0.7 to, that's about 700 pips. point to point. Broken down in threes, that's roughly what? About 230 each. So that would be from 7-2 to about 9-5, which is actually about right in here to be exact. And then from 9-5 to about 1-2. About right there, and then that third level being up here at 1.4. So my levels are about right like that. Of course, that's not that exact, but that's rough estimate of the levels right there.
Makes sense.
So in order to do, a lot of times you can also predict level 2 and 3 by identifying level 1. For example, had this been predicted, oh shit. Had this been predicted before this happened, you could have easily been able to gauge level 2 and level 3 had you known you were in level 1. And that's why I trade complete cycles. I trade complete cycles for the whole 3 levels. That's how I know when reversals are coming. Because I've been in the market long enough to be at the absolute beginning and end of so many cycles. I know exactly where the next cycle is going to start based on the length of time I've spent in the market. Like somebody new would hop into the market today and not know what level, what cycle, or anything we're in. With the longer you're in the market, the more cycles you'll see from start to finish. So you'll be sitting here and you'll be able to see a whole cycle end and know for a fact a new cycle starting, versus somebody who's just getting in the market not knowing because they weren't there for the previous cycle. So they have no idea where we're at in the cycle, what level we're in the cycle, or if the cycle's starting, if they're jumping in the beginning of a cycle. But being in the market for a complete cycle lets you know, okay, and being able to identify the end of that cycle lets you know, okay, here's a new one. I know for a fact a new one's starting because I just saw the whole last one. That makes sense?
That makes perfect sense.
Good deal. So, for example, with these USD pairs, right now we are seeing the beginning of a bearish cycle. So knowing we're at the beginning of a bearish cycle, we know we can expect 3 levels. 3 levels of bears before the bulls come back in.
So the bears are coming in because the dollar is going bullish?
Exactly. On the euro. So it depends on which, of course, what pair you're looking at. On the USD CAD, the bulls are coming in. So you can, if you're looking at the entire market, you can pretty much think of it as the dollar bulls are coming in the market.
Okay.
The dollar bulls are coming in the market, taking the euro, putting the euro in bear position or in bear market status. Here's that pound USD. Look at how it's, as far as the sessions are concerned, with these boxes you see, this purple one right here is Asian, this blue one is London, and this green one over here that hasn't started yet is New York. Now, using these to your advantage, based on basically this current square that we just came out of, current box, is London session volume. So if you use that to your advantage, looking at yesterday, you can see that this London session volume low is at the high of the Asian session, the high of New York, and it's lower than the high of yesterday's Asian session. So that's telling you a few things about today's London session traders. Today's London session traders are telling us that price went as high as they were allowed it to go for this week, because this is the high of the week. That's also the highest they allowed it to go for today, because it's the high of today. Based on yesterday, you can see that they allowed it to go higher than the New York traders did, a lot higher than the London session traders did, but barely higher than the Asian session traders did. And today, the Asian session traders didn't even allow it to get as high as they did yesterday. It didn't get as high as it did yesterday until the London session traders came in. So looking at the New York volume, the New York volume came into the market yesterday at 1.265. It ended the market at 1.273. So as of right now, we're already as high as the New York session traders allowed price to go yesterday, as well as the same zone the Asian sessions allowed it to get to yesterday. So technically right now we're at previous day's highest points. And we still have 2 sessions to go. And we can see that yesterday's London and New York were almost 100, or well, I say 70 pips lower. Each session, each day, each candle revisits zones from the previous day or session. So what that's telling me is in some point in New York, we're going to revisit the lowest point of yesterday, which is right, which is here. And what I can tell based on price action is the high has already been sealed off based on the acceptance of volume from the previous session trader. It was capped off right here. London session trader said, okay, this is as high as we're going to let it go for the week, pretty much. Higher than any of the other sessions, and then it immediately brought it back into yesterday's range. So now we're headed down to the downside. We can also confirm that with our Fibonacci once again, and that's using this swing here. Using this swing here, now look at my current points. Notice how they fall right in line with the bigger picture.
The TP2 is perfectly where you said it would go below the New York.
Right at the bottom. Look at what we got right here. An order block. An order block in this rally. It's a little bigger than most order blocks you see, but it's right.
Yes, and that's that sell before the big rally up.
Exactly. And notice how it came in right at the start of the New York session.
Yes.
And this, what we're looking at, is the 15-minute chart. Look at how precise your entries would be using the 15-minute chart, entering those zones. Entering that brand new or the open or close of new 15s. Look at how your entries will sit at those peak levels. Very, very precise. For example, even on this pound USD, the 15-minute candle started at 2 minutes ago. So this candle, even right here, could have been taken for a sell at the start of that 15. because this 15 should fall and crumble. Based on, if you look, that green candle, that buy that we just got right there,
Yes.
is the order block in real time. In this rally down, that's the order block. Notice how it falls right, and it's going to form that resistance. Old support or old resistance became support. Now it's becoming resistance again. So by the 45-minute candle, the next 15-minute candle, we should see a nice sell-off here on the pound USD, which means we'll see a bullish continuation here on the dollar. Here's the dollar. Did I do the dollar while we were online, or did I do that earlier?
No, you didn't do it while we were online.
Okay. This is my markup for the dollar. It's pretty much following my blueprint already, but here we go with this dollar going bullish. That is confirming the bears in the European sectors and the bears against the dollar. As far as yesterday's low is concerned on the dollar, we've already clipped that. Yesterday's low, yesterday's high, and yesterday's open. And if we come into the 1 hour, there are those points. Low, open, high of yesterday. And look at how structure is proceeding to those points.
Let's see. All right, quick question, bro. Will I be able to go back and watch this?
Yeah, it's actually streaming right now on the live.
Okay, because you dropped a lot of knowledge.
Okay, yeah, yes, sir, yes, sir. You'll be able to record it, and I'll send you a direct link for it too.
Okay, cool.
And these trades, now that they have in position and they're taken off from the high of the week, I'm actually going to be holding these to TP. Of course, taking partials once I hit the daily, and then letting them ride the rest of the way.
That's another thing I'm working on is when to take some partial profits, because last week the heavy losses came in GU after I was in profit quite a bit of pips. And I decided to hold it for a little bit.
And that's when that spike came back and knocked you out.
Yeah.
With that, I would say, whenever if you got to step away from the computer or handle other business, I would say automatically go ahead and put your stop in profit, or at least take majority of the profit off the board. That way, even if you say, for instance, don't move your stop and it does come back and hit you, you still profited. Even if, say, for instance, you take partial and it's $25, and then the loss comes in, you didn't move the stop and it stops you out and you lose 20. You still made 5 because you took partials, rather than your whole account taking a hit for 20. So I always say secure profits anytime you think, should I take profit? Anytime you like, should I take profit or hold it? Automatically go ahead and take some off the board.
Got it. I'm gonna start doing that.
As soon as that thought crosses your mind, secure the bag. And over the years, I just got in the habit of leaving pennies. So whatever my lot size is, I'll automatically take everything but a penny from it.
I've noticed that you've been doing that, and I like that idea. It allows you to stay in a trade, but you took more of the profits away.
Exactly. And it helps you helps you know where you're at in the cycle. Once you get in the habit of using it, you'll start to see, okay, I entered this trade at the beginning of a cycle. It's moved X amount of pips. Okay, I see the structure. Okay, we're still in level two. I can get ready to buy again, or I can get ready to sell again because I know my penny is at level one. And then, of course, on the next trade, if I take a trade at level two to level three and I take partials, now I know I have a penny at level one and level two. Now I'm looking for level three, getting ready to reversal. Once I see that level three reversal, I can take profit on level one and level two, and now I'm in the cycle going the other way. That's where a lot of times, whenever I pick a direction or I call out a trade, sometimes people get confused because I'm trading I'm trading long term on a long term basis, but on a daily basis, I'm trading wherever the market's going on that day. So, for example, long term, I believe pound is still in a bullish sentiment based on structure, but for the month, but it's only the 10th. We've got 20 days left in this month. I know for the next couple of days we'll be resetting the cycle, which will reset typically in level two, which is also the 50 or the 61% retracement on the Fibonacci. And we know that in a trend, the 50 or 60 in a Fibonacci is just the retracement for another entry and continuation. That's all level two is in a trend. In a trend, level two is the 50 or 61, which is another entry for a continuation of the trend in that direction. For example, Fibonacci, if I pull it from here to here, it's going to tell me TP. It's actually not even going to reach TP. It's actually going to be TP1 around right there, but I'll show you where you would buy on this complete cycle from low to high. That's drawing the fibs on the whole, all three levels. The buy, as you see, is on top of level one, below level two. Here would be your buy to continuation in this cycle. And remember that second leg is typically the same size as the first.
So for this pair in particular, will it just continue to moonshot as the dollar continues to fall?
Say that one more time.
Will it continue to moonshot if the dollar continues to fall?
This euro, yeah, the euro will keep rising if the dollar continues to fall. I do see this retrace right now on the USD CHF. When's the next? Okay, we got 4 minutes for that next 15-minute candle comes in. Now another thing, let's check the news. Let's see if there's any announcements that are coming out, because those also play a big factor. Now, what do you use currently to check any news if you're checking it?
Forest Factory.
Okay.
I think that's the website that I'm using. I don't check it daily.
Okay, what I use is my FX book. I'm gonna send you the link right now.
You say you use my FX book?
Yeah.
Cool. I will use that as well.
So what I see on this economic calendar for today is they had a meeting on oil, OPEC. That's what that stands for. Organization of Petroleum exporting countries rather. Not too much today. We got some mortgage applications and stuff coming out in a minute. Now that data there could actually tank the dollar and reverse the market, which would actually send this euro much higher.
What time is that news coming out?
That news is, well, we have mortgage in 15 minutes, and then we have the major data coming in an hour and 45 minutes. So what is that? It's 6:45 your time now, so that's 9 o'clock. Yeah, that data comes in at 9, which will shift the market. That's going to be that New York session. That's going to be when the New York session comes into play. That's when this data is going to shift again.
Okay. So when there's news, and the overall trend is looking like it's going to go opposite of what the news says, and then the news comes out and spikes in whatever direction it's going to go.
When you see news coming, really what you want to look for is structure on a higher time frame. Because what the news does often is it completes structure. So what we'll likely see, what we could also see, is an acceleration into the new cycle. Since we are at the end of a cycle and we're in level 3s, what we could see is acceleration to reset the whole cycle and start a new one. So that would actually trigger the resets and push price in our favor extremely fast. Because one thing for sure that we've already confirmed is divergence. So we've already confirmed the divergence, and that's prior to the news. So like when I say news complete structure, news is going to accelerate that divergence. Now, had divergence not appeared before the news becomes present, then we would look for the news to form divergence. But the divergence is already formed. So we're looking for the news to accelerate the divergence. Some of the pairs are retesting the highs and lows, but the pairs that are already at the higher lows are pretty much just sitting there. Like we just had Euro shoot up there and retest its high. Notice how we're also forming a head and shoulders. We formed the head and shoulders here on the Euro. on the 5 minute chart. Head or shoulder, head, shoulder.
Yeah, let's see.
Same on the pound, I believe. But the pound has already been showing its downtrend here. So I'm gonna pull all the charts up there. Let me get rid of this dollar.
Oh shit! No, how do you do that?
Oh, bring them all up like that?
Yeah.
Okay, you would press this button right here.
So is that on MetaTrader 4?
Yeah.
Okay, I'm using.
Are you using Trading View?
Yeah.
Okay, yeah. Trading View's a little different. Trading View's really structured, You get a little more, leeway.
MetaTrader 4 on my computer because my computer's only allowing me MetaTrader 5. But I don't like MetaTrader 5.
Yeah, I don't need. I feel you on that. I don't too much agree with that. MetaTrader 5 isn't the best. I actually never upgraded to MetaTrader 5 from MetaTrader 4. Now, are you on a MacBook or a regular Windows?
Chromebook.
Chromebook. Okay. And I don't know if you can actually get MetaTrader 4 on a Chromebook.
What kind of laptop do you have?
I have just a regular Windows. As a Dell,
Dell.
but it runs off the Windows software. The Chromebook, it allows you to add Google Play apps and Android apps, which MetaTrader 5 is, but it wasn't established when MetaTrader 4 was created.
I see. Okay, so I'll just go buy another laptop then.
Yeah, all you need to do when you go is just make sure it has a Windows operating system. I avoid the Macs because they're a little difficult to add programs. You got to go through third party to add anything that's not directly purchased off the Apple Store. So the MacBooks are a little difficult. I never went that route either. But from everybody that's come into Forex with a MacBook, they've had extremely hard time with the software.
Yeah, Apple's very difficult.
Yeah, definitely. Apple will give you a headache.
Man.
For sure. So any I know you got to go to work shortly. Any questions about anything that I went over? Anything you want me to touch on?
No, actually, I got all my notes and I understand everything pretty well. It's just gonna be a matter of now practicing the techniques that you've shown here today.
Okay, smooth. Good deal. Good deal. Now, say after about a week or two of you trying out these new techniques in your game plan, we can then touch base and review anything if you have any questions from those trials and errors.
Oh man, that's gonna be major. Yes, I appreciate that.
No doubt. No doubt. Let's keep winning.
Yes. you showed me. I like it already.
The weekly.
Yeah, looking at the close. I'm sorry, the high and the low of the previous week's candle.
Yeah, that's really clutch because that gives you a indication of where the majority, the most recent track volumes at. And once you find the trap volume, you can see pretty much where they're going and where they have been.
You know what question I did have is from the academy. The ADR indicator that you speak about in the intraday video.
Okay.
I can't seem to find that indicator anywhere. I looked on my MetaTrader 4 from my phone, and I looked on TradingView, and I keep finding average true range, but I can't find the average daily range.
Okay, I'll have to send you that one individually.
Okay.
So let me see if I can send it to you on Facebook. Let's see real quick. Oh, I sent you a whole thing. Okay, yeah, it's in there. If you know how to open the zip files, right?
Yes.
Okay, it's inside that zip file.
You just sent it?
Yeah, I sent it through your Facebook.
Okay. I haven't received the zip file yet.
Okay, let me check on it real quick. Oh, okay. About now. Should be coming through.
Got it.
Okay, great.
Oh, wait, never mind. That was a different message.
Okay, shoot. Let me see.
You gotta forgive me. I've been smoking all morning.
It's all good. It's all good, my guy. Let me see. It said it sent, but it didn't send. I'm probably gonna have to email it to you. That'll probably be the easiest route to get it over there to you. Message me once we get off. Message me your email, and I'll send those. I'll send a whole template file to your email. Now they're only compatible with MT4, but I'll go ahead and send them over to you.
Oh, that'd be cool because I use MT4 for my phone, and then I'll just buy a new laptop probably next week.
Okay.
Get the MT4 on there.
All right. Yeah, I'll shoot them over there. I'll have to email them to you though. So just shoot me your whichever email you want me to deliver them to, and I got you.
I appreciate it.
No doubt. And I'll send the direct link to this video there too.
Cool. I'm gonna get on this today.
Most definitely. And I also stream this one live on the YouTube.
Yeah, I'll be on there too.
Most definitely. Well, my brother, yeah, I'm holding this USD CHF. I got the stop down there about 10 pip down at 9445, right in that area. About 10 pips below the where it's at right now.
Okay, so you're gonna hold it until the start of New York?
Yeah, I'm actually gonna hold it through until about about noon.
Okay, so that'd be like 10 my time. That,
Yeah, about 10 your time.
I appreciate you, man. This was very helpful, very informative.
No doubt, my brother. Again, if you need it, once we touch bases again, we'll go ahead and wrap up anything we left off.
All right, brother.
No doubt. Have a good one,
Peace.
bro.